April 2nd, 2025, will forever remain in the history of North American energy. It is not just the day when oil began to flow through the expanded TransMountain pipeline, but a true geopolitical point of no return. On this very day, Canada ceased to be a silent energy appendage of the United States and took a step toward energy sovereignty. By extending a hand to Beijing, Ottawa made it clear to Washington the old game is over. A sharp drop in oil prices in North America, by nearly 15%, against the backdrop of a new wave of tariffs from the White House, became the first alarming signal. The world began to rapidly change the rules. The familiar architecture of energy flows between the two countries, the United States and Canada, had been built over decades. But now, as raw materials from Alberta can freely be exported to China, India, and other Asia-Pacific countries, Washington has found itself in a position it is unaccustomed to, that of an observer, not a controller. The TransMountain expansion project became a symbol of this transformation. A massive infrastructure undertaking, initially estimated at 7.4 billion Canadian dollars, ultimately cost taxpayers almost 5 times more, 34 billion. But the issue is not about money. It was a political and economic gesture. Canada is willing to overpay in order to gain freedom. Freedom to choose to whom to sell oil, at what price, and under what conditions. Now, up to 890,000 barrels can be transported daily through the pipeline. This figure has already shifted the balance of oil flows in the Pacific region. Asian countries, previously reliant on Middle Eastern oil, suddenly received a new option, Canadian crude. And that means a new source of pressure on suppliers from OPEC. Previously, nearly 99% of Canadian oil was sent to the United States. American refineries, especially in the Midwest, were technologically tied to this oil. But now that monopoly contract is under threat. New shipments are being sent to China, where traders are ready to pay a premium for stability and political neutrality of the supplier. While the United States imposes sanctions, new tariffs, and creates instability, Canada appears increasingly reliable. Washington has found itself in a position where any attempt at pressure only deepens the divide. What are the options for the United States? Purchasing from Venezuela, increasing imports from the Middle East, geopolitically risky, expanding domestic production, already underway but its peak is in the past. The loss of Canadian oil is not just an economic blow, it is a strike against energy security. Meanwhile, within Canada, there is a storm of criticism. Environmentalists and representatives of Indigenous peoples call TMX a betrayal of the country's climate goals. Despite promises to reduce emissions to net zero, the project will increase the carbon footprint by between 14 and 17 million tons of CO2 per year. Legal battles continue, protests persist, and although the pipeline is already operational, the social cost of this move has not yet been paid. At the other end of the world, Beijing is rubbing its hands. China is the world's largest importer of oil, more than 11 million barrels per day. Any new supply direction is an ace in the great energy game. Beijing knows that if it can reliably secure Canadian oil, it will strengthen its position in negotiations with OPEC and even with Russia, not to mention the opportunity to promote the yuan as a settlement currency. This is where another shift takes place, hidden from the eyes of the general public. Beijing does not merely want to buy Canadian oil. It wants to buy it in yuan. This is an ambitious, strategic, and very dangerous idea for the dollar. Since the agreement signed in the 1970s, Saudi Arabia and other OPEC countries have sold oil exclusively for dollars. This created the petrodollar phenomenon, the foundation of American financial hegemony. Today, the petrodollar is cracking, and the culprit is not Canada or China individually, but their alliance, even if unofficial. In 2018, China launched oil futures trading in yuan. For now, it is only a partial alternative, but if Canada begins to adopt this scheme, it will be a true revolution. Beijing has already held negotiations with Saudi Arabia on switching to yuan-based transactions. If Riyadh agrees, the global oil market could find itself on the brink of a new currency era. The dollar would lose its status as the unrivaled intermediary. Along with it, other pillars of American power would begin to tremble. It is important to understand, Canada has until now been a loyal ally of the United States. But, tired of its role as a gas station and the constant humiliation from Washington, it has found in China a new path. Liquefied natural gas is now entering the game. The LNG Canada project in British Columbia, valued at $40 billion, is set to launch by the end of 2025. 14 million tons of LNG annually. These are not just numbers. This is a direct statement that Canada is entering the club of global energy exporters. Energy diversification also means political diversification. At the UN, G20, and climate summits, Canada's voice will now sound different. It is no longer the quiet northern neighbor of the United States. It is a country with levers of influence over dozens of nations, from Japan to India. But the United States is not planning to give up its position without a fight. Discussions are already underway about imposing taxes on Canadian exports, tightening border controls, and even possibly revisiting agreements under the USMCA. Washington may try to play hardball, but will it be effective in a context where Donald Trump himself is dismantling a system that took decades to build? Against this backdrop, the role of other players is increasing. Russia, Iran, Turkey, and even India are more frequently striking deals not in dollars, but in national currencies. This trend, once seen as marginal, is now becoming almost the norm. Financial flows are beginning to slip out of the Federal Reserve's control, and that means the political influence of the United States is weakening as well. The world is changing before our eyes. Canada's transition from monodependence to energy diversity is not just a success story. It is a warning to the United States. If it continues to build its policy on ultimatums and tariffs, it will lose not only allies but also global leadership. A warning to the world. The era of the petrodollar is not eternal, and perhaps we are already living in its final years. Ahead lies a decade of turbulence. Whoever can adapt will become the new leader. Whoever clings to the past will lose. Canada has made its choice. Whether the United States will make its own remains an open question.